Hello everyone, welcome back to Klever Stocks, the Education Wing. I'm your host for the Education Wing here, Kelvin. And today I'm going to share with you on how to invest into dividend stocks. So these are some of the things I can maybe live share with you guys, how to restructure your portfolio, right? For whether for your retirement or maybe for your education. I believe there are a lot of investors out there. You are thinking of going into investing in some of the stocks, okay, get dividends, prepare for your retirement in the future, where you can actually rely on this dividend as an income for your retirement, right? Or maybe an value added, or maybe a buy income from your investment through the capital gain. So there are a few things that you need to take note of if you want to invest into dividends. It's not just looking at the dividend yields. It's not just looking at whether company is giving out dividends. You need to check whether these stocks is actually going to have a growth in their capital or not in terms of their share price. Because like I always say, if let's say you invest into a stocks, okay, let's say right now it's at 2 ringgit. When you invest in, then end of the year it goes down to 1 ringgit, which means that 50% of your capital is gone. So when 50% of the capital is gone, and guess what? How many years of dividend you are going to get in order for you to get back, okay, the returns of that losses, right? So that's why dividend, today we are just going to talk about dividend investing, dividend stocks. We are not going to talk about the growth stock, but growth stock wise is always one thing that you should look into it. Then at least you would not spend like the next 30 years or maybe 20 years to collect the dividend to get back that capital gain. So in that case wise, there's nothing means that you can invest into one stock and then you hold it for the rest of your life or maybe 30 years, 20 years. You still need to review it, okay? So how do you review? You need to look into economic first, macroeconomic. What is the current trend right now? Where does this hot money, okay, park their money into which kind of sectors? So when they park into those sectors, which means that those sectors are booming and there will be capital appreciation, and also together with the dividend payout as well. Just like for example right now, we all know AI chip, okay, AI is the trend of the whole world right now, where the hot money is pouring their money into these sectors and also the data center side. So then we need to look into which kind of sectors is going to have benefits, or maybe the companies that's going to benefit. Like for example, in US, we all know Nvidia, AMD, Microsoft, Apple, all these, they are looking into AI. And also in Malaysia side, we can look into some of the semiconductors, because AI requires a semiconductor in order for them to power this AI to be more advanced, okay? Then other than that, in order to let AI to be more advanced, okay, more innovative, coming out, okay, or upgrading, you need to have the infrastructure. So what are the infrastructure that we need? We need the data center. So when we look into data center, what are the things that they need? Storage, and also software, and of course the telecommunication, which is the internet access. So in this four over here, we do see like data side, okay, storage, definitely the chipsets, okay, or maybe the storage company who are doing, they can come out with much more faster way of transmitting all this data or the information around. So when you need to transfer it fast, it's not just on the storage side, you need to look into the infrastructure as well, which is like the internet, whether it's going to grow as well. So you can see from here, there are two sectors that is going to be benefit from that. So one is the chip maker, another one will be the the telecommunication, and then the third one, you need to have a good software as well. So software you can divide into two. So one is actually the software to manage the whole data system, okay, or maybe the data center. So those are the one could benefit, maybe either Microsoft or Linux or maybe ASIC, or those they will benefit from that. And then the second one will be the security. So if let's say you want to store your memories or maybe your personal information into the cloud, so you definitely choose some of those data center or maybe data provider that provides you a good securities, right? So that's why maybe some of these antivirus or maybe a software safety company is going to boom as well. So that's why these are the things that we should look into it. So we right now look into it, maybe this thing could last for 2 years, 5 years, or maybe 10 years. shares. So when until a point that you find that, okay, there's a peak right now and this stocks, okay, is no longer competitive, then you can start to change your portfolio into other stocks. Like example, in the past, okay, when Microsoft just came out, Microsoft was the booming one among all the OS provider, right? So that's why when you invest into it, then Microsoft, when it goes up to a point, then they start to fall. Okay, because it's not competitive enough. That's where Apple actually comes in and take up the market. Okay, become the most valuable companies. Then when it hits to a certain point, Apple starts to go down again. Then Google starts to comes in again. When Google comes in until a point, it starts to peak. Then it goes down. Then the next one comes in, maybe like Amazon or maybe like some other company as well. Then slowly, right now, we start to see like Microsoft is coming back as one of the biggest market or capital, okay, market capital appreciation that it goes up a lot, or you can call it the most valuable one. Okay, so that's why it's never ending review and switching your portfolio. So not just looking at dividend. As long as you can see, as long as they are making good profit, they are able to pay out dividends. Okay, so if we want, other than just looking at the macro point of view and also the hot money, where do they go, and then which kind of stocks that you should invest into it. Now we focus into dividend stock after you know, okay, this stock is going to have a high growth one. Okay, so look into a dividend. So basically, what is dividend? So basically, dividend is a portion of profits given back to the shareholder that can help increase investor loyalty and also boost the stock price at some point, and also make good use of the extra cash for the company. So basically, you have to understand one thing: dividend can only pay out if they make profit. So if they didn't make profit, then they cannot pay out dividend based on losses or maybe based on loan. So after the whole financial year, they calculate, or maybe the quarter they calculate, they find that, oh, okay, we still have a bit of excess money, so they can actually put it into the dividend, okay, paying out to others. So that's why if sometimes you see some of the investment scheme outside, not in the stock market, they are telling you that they are going to pay you the dividend of 12% or maybe 14% or maybe 8%. And don't believe that they say like, okay, they are interest, okay, they are going to pay you that. No, those are dividend. Make sure you look at the fact sheet correctly. Dividend means that if they don't make profit, you don't get dividend. If they make profit, then only you get to share the 12%. Okay, so it can be moving up and down. So it's not based on the value that you invest in. It's not FD. Okay, so they can't pay you interest unless they are banks. So these are not banks. So you have to remember that dividend is paid out of profit, even though maybe the salesperson or maybe the agents tells you like they have been paying all the while. Yes, they can be paying all the while, they are making profit all the while, but there will be time that they are not making profit as well, right? So we all gone through the pandemic. We know that things that can happen anytime. So profit, can be down at any time, can be affected by a lot of different factors. So don't think that there will be an evergreen kind of business out there. Okay, so that's why instead of like putting this money into buying, expanding the company, or maybe moving or paying bonus to the staff, okay, sometimes they need to allocate this money to pay to the investor, because as an investor, when you receive dividend that day, you'll be the happiest man of the day. Extra cash suddenly comes in, then you'll be very happy, right? So that's where how you can build the investor loyalty. And stock price wise, whether it move up higher or not is not really direct correlated with the company dividend policy. Okay, so all those investors or hot money out there, they always see this dividend as a side income, a second income. Okay, that is not a main income that they want to look at. The main thing that you need to look at for investing is always capital appreciation. Okay, so next thing is that dividend yield. I know a lot of people likes to talk about dividend yield, but I do see a lot of people don't really understand dividend. What is dividend yield? Okay, some people, they will say like, okay, these stocks, okay, or maybe stocks A, they are paying out a higher dividend, they have higher dividend yield, and stock B have lower dividend yield. So right now, sometimes it could be like you invest into the lower dividend yield, which is stock B, will be a better choice. Why do I say that? Is because maybe stock B, okay, have lower price, but the dividend yield is a bit, the dividend that they pay out per share is slightly higher. Sometimes it could be higher than stock A. Okay, so why does it mean by that is because if you look into the dividend yield formula, it basically is like looking at their annual dividend per share. Let's say right now, my company is paying out like 50 cents per share, okay, annualized. And then the stock, you need to divide by the stock price per share. So you can see here is that dividend is not always changing because every quarter then they will have payout different, right? Or maybe every year they will pay out different. But one thing is that the stock price can change every day. As long as their market is going, then the stock price can change. So which means that with this formula, it means if the stock price goes down lower, the dividend yield will go up higher, right? So sometimes the higher dividend yield doesn't mean it's good because there might be something happening to stock A that it caused the stock price to go down a lot and they are using the previous year dividend to calculate the current dividend yield or maybe the previous dividend payout to calculate the dividend yield for now. So right now, suddenly a plunge, definitely you'll find that the dividend yield is so much attractive because the stock price has already fallen. Okay, so let's say for example, I pay out like dividend yield of 50 cents and my stock price is only 0.1 cent, so which means that my dividend yield could be 5%. But if you look into another stocks, that let's say they are paying like maybe 1 ringgit and also they are the stock price, okay, could be 5 ringgit, but the dividend yield will be only 2%. But you can see 5 ringgit stocks, okay, let's say in the blue chip, then it's much more safer, right, for you to get, and they are more sustained and also consistent when they come into paying out dividends, all right? So that's why it's not about always dividend yield is good, then the stock is good for you to invest into it. Let's say, for example, if you look into like Unisem right now, in the past 1 week, the price has been dropping crazy from 4 ringgit down to about 3 ringgit plus, right? So right now, it is lesser price right now, okay, at the lower price right now. So the dividend yield is like 2.25%, okay? So it seems like, wow, it's still better, okay? Looks not bad. If we look into Inari, the direct competitors of Unisem, the dividend yield is 2.14%, but the pricing is 3.64. And also the one thing that you have to always remember, the market cap is 13 billion. Let's say Unisem, how much is it? The market cap is only 5.74 billion. So it's like half, more than, Inari is definitely more than 100% of this capital cap, market cap for this Unisem. So yes, okay, Unisem provide a slightly 0.1% more for their dividend yield, but the market cap is so much bigger for Inari, which means that they are so much more bigger in size, okay? So that's why if the dividend yield is lower for Inari, so it means that, okay, it doesn't mean that it's not a good investment into it, but you need to compare, okay, the market cap, which one is much more bigger, which one is much more lesser. So you know that it's lower risk for you to invest into it for dividend yield, okay? So the next one will be stocks. Stocks with strong dividends payout history are usually from mature companies with stable earnings and can act as a hedge against any stock market volatility. For example, you can see why Warren Buffett always like to invest into Coca-Cola, why he still hold his position in Coca-Cola and buy lesser in those like Apple or those which recently he just announced that he sold Apple stocks, right? Then before the whole market crash. So you can see that Coca-Cola, it has been there for a very long time, okay, almost a decade right now. So they are very mature company, which they can pay out dividends so good, okay, so consistently, because they have already captured the market. Basically, you can't find any new products that is coming in that is able to replace Coca-Cola, right? So those who like soft drink, Coca-Cola, those who like cola, you are Pepsi person or maybe you are a Coca-Cola person. So it's so global. So that's why when it's matured, the money that they are generating, the revenue or the profit that they are coming in is so consistent, and their operation cost, because it's so matured. So their operation system, everything is fixed there. So the thing that they need to do is to learn how to make sure the operation cost can be lower. So when it's lower, then they can make more profit. So when they make more profit, then they can pay out more dividends. So that's why matured company are usually a company that can pay you a better dividend yield. Okay, so yes, of course, Unisem and Inari, all these are quite matured out there, but it's quite cyclical for this. Let's say, for example, if we look into some of the stock like P Metal, okay, so P Metal is considered quite mature right now because what they do here is that they never ending just increasing their market cap, okay, increasing their share price, just to use this, okay, to acquire other companies so that they can boost their revenue. Yeah, so you can see here, although the dividend yield is 1.39%, is almost about 1% lower than those Unisem and Inari, but the market cap is 41.45 billion. So it's again like 2 times more than Inari. So which means that this is very what you call this? This is a very matured stocks, okay, which they are doing metals, and you can see their quarterly earnings from here. Earning per share is going up and up higher. If you look at like for the past 10 years for P Metal, other than this, price fall over here is because there's some adjustment after the share issue or maybe bonus shares, which every one of you likes it, okay, bonus share issues. In the past 10 years, the price has been moving up and up and up. So you don't really see them have like a very huge fall unless the market has gone through into a correction, right? So that's why you can see these are the stocks that they are giving you very consistent consistent business, consistent revenue gain. Although the revenue growth every year is not that great, it's not like very tremendous growth, but they are still growing bit by bit. And if you look into like others like the share price, okay, the share price is moving up bit by bit each year. So that's why if you're looking for long-term investment, then this could be a good stocks for you to invest into it for long term. So because they are so matured, right? So you can see quarterly earning revenue is moving up. Okay, year on year, even it does drop, but it's not dropping that much. They are still in the billion mark. So from here, you can see CFO cash flow statement, their cash flow is good. So they are reserving more funds out there. If you look into year on year, they are still increasing the cash flow. So you can see all these are the matured stocks that you can look at it, all right? So the thing here is that, okay, make sure you remember that the dividend is the side of it, okay? Always look for those that has a capital gain, okay? Maybe mature stocks, they are never ending pushing the price up higher. Look at Apple, they are keep on pushing the price up higher by share buyback, or maybe in other form of pushing the price up higher. So in Malaysia market, we do see a lot of all these kind of mature stocks, which can be top 5 company in the world, okay? So those are the stocks that they are consistently moving, okay, or pushing the value of the stocks higher and higher, and at the same time increasing their revenue bit by bit and consistently, and at the same time they are paying out dividend, okay? So basically these are the things that you need to look into it. But don't forget, if you want to be your own fund manager, then you need to keep yourself up to date right now. What are the sector that the hot money is going to invest into it? Then you will have a better chance for higher capital appreciation. At the same time, during the trend there, when they are making money for that sectors, they are going to pay you the dividend. So right after the trend is done, then you need to look for new trend in other sectors that the hot money is going to pour their money in. Then you can write the sail your ship, okay, according to the wind, and it's much more easier and safer way for you to invest in terms of dividend as well, okay? So I'll stop here at the moment. Later on, the next episode, we will share with you on details how to understand each of the key takeaways from here, which is the dividend yield, and also on the rationale behind investing in dividend stocks. Thank you very much. I'll see you guys again.
Klever Stock, the ultimate financial insight for everyone.